You're watching today's video technical update presented by FXTimes. It is Monday, August 30th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. I'll be using VT Trader, so please download this trading platform to follow along. After last week's correction, the Japanese yen and greenback are surging again, but it's the Japanese currency that is dominant after speculation of an intervention was put to rest. Let's see what scenarios look most probable for the euro dollar, Aussie dollar, US dollar Japanese yen, pound yen, and Canadian dollar yen pairs. This video is being produced at about 11 a.m. Eastern Time during the US trading session. Here we start with the euro dollar, and I want to point out that the theme of the day is negative reversal, and that occurs when your RSI makes a higher high, such as this, but the corresponding highs in the price is a lower high. So you have this type of negative reversal, which is once the market tops off, is a negative signal, and the market did top off below 1.28, which is the 61.8% retracement level. So below the 61.8, the market topped off and is declining. A swing projection points to about the 1.2440 level or 1.2450 level, which, as we know from previous weeks, is an important level, which is right here. So 1.2450 is the target, and is also the area that the market should not break below if it were to maintain this bullish count of 1, 2, 3, 4, and then a 5. So there might be some support there, and you could see that at the moment we are at 61.8%. I don't have it shown, but it's 1.2450 is around the 78.6%. Here with the larger retracement, this is the 61.8%. So you see that right now at 1.26 there's a cluster of certain Fibonacci ratios, and also at 1.2450, so that's the next level of support. So negative reversal is what we see, is the signal here. We also see that in the dollar yen. So here's the dollar yen, and last week we were stalking this rally. Of course, I was a little early in anticipating the topping near 85, as the market has another or developed another swing up here. So when you look at where this swing ended up, I remember I said, you don't want to see the swing break above the middle pivot of this consolidation. So you could sort of measure where that is, and you see that 50% is just at 85.60. Now the market did come up a little bit above that, but the rejection is more important, is the more important reading than the fact that it broke. So the rejection, and then the ability for the market to create these tails here, and then a follow through with another bearish candle, signifies this area as a resistance, and it's after two swings that is a strong resistance area, and a decline is to be expected. Here you have a different type of negative reversal. You see the RSI did not go all the way below 30 before this first top, whereas in the euro dollar, the RSI did go below 30 and eventually developed into bullish divergence coupled with the negative reversal. Here you only have a negative reversal, so it's not as strong, arguably, against compared to the one in the euro dollar. Nonetheless, the US dollar Japanese yen is very weak, and here if the market breaks below this current support, then we have continuation lower towards the all-time low at 79.75. Okay, so continuing now with the Aussie dollar. Here's the daily, and this is we spotted a head and shoulder last week when the market broke below 0.8850, and here we had support, however, near this 88 area, 87.80 area, which is with this rising support. So this was an expected area of support, and the market has since rallied The RSI is at above 40. So there's some bullish implications here in the daily, but in the intermediate short term, this week and the next week, we may have another decline if this pullback tops off. So looking at the 4-hour time frame, okay, from the top here we have this pullback come up to about the 61.8% at 90.50 area. Okay, and this chart in the 4-hour time frame shows another negative reversal. So you see this negative reversal is similar to the euro dollar. So you see that dollar strength across the board, well, at least for these two pairs that we looked at, have some unfinished business. It has one more swing. Okay, so Aussie dollar developing that swing. However, as we see that in the daily, there's some bullish forces, and a head and shoulder is unconfirmed at the moment, so it could actually be a continuation pattern. 4-hour time frame, we see that this broke the declining trend line, so what you should be doing is stalking this decline to see if it will be supported. Okay, so we may want to turn to 1 hour or even 15-minute charts. So it might be a little messy here. 15-minute chart. Let me redo this Fibonacci study in this time frame. So if the market starts to decline and it fails to decline past this 0.8870 area, then we may have a bullish scenario developing. So this may be actually your bearish signal of continuation. So in your daily, you see this head and shoulder, you see a rally, and then now you see today we have possible topping action, and in the 15-minute time frame, we see that topping action can be established if the market returns here to this previous resistance area and breaks below 0.8870. Okay, so that's your bearish scenario. So continuing with the theme of Japanese yen strength, which we saw in the dollar yen, and now we're also seeing in the pound yen, continuing this decline. Okay, so what we have here is this decline, and then last week, as with most yen pairs, we had this correction rally, two-swing correction rally. Pound yen ended up here at 133.70 area, below the 200 moving average, and is declining. If you look at the RSI, we have, well, first we have a bullish divergence. Oh, it's not even a bullish divergence. It's pretty much just a flat bottom here. But the top here, we have the RSI top here is higher than the previous top, but not the price high. So as we've seen, that is, a projection as such. That points to about the 127.50 area. Okay, so that's the next projection. Confirmation would come from this break of this rising trend line, and possibly a failed pullback as such. And then if this doesn't break above our 133 area, then we should have another decline towards 127.50. So that's pound yen in the 4-hour. In the daily, we also see that 127.50 is near this previous low here, and that area should provide some support if the market reaches down there. We could see in the daily the RSI is of bearish, has a bearish mode. Here we have hit below 30 and failed to rise above 60, and then here coming back below 30. So Japanese yen looking strong, pound yen looking to revisit the previous low in May. Canadian dollar yen also was broke an important level last week, 82, and last week we had a rally, tested 82, and you see the market declining again. So Canadian dollar yen looking very weak after breaking below this triangle pattern. And if you look at the weekly, we have some ways to go. towards the bottom. You see here, we have, we are in the support zone. We broke up higher, the upper bound of it, and now we're getting deep into it. If the RSI breaks below 40, you see here RSI broke below 30, failed to break below above 60, and now is threatening to break below 40. With the strength of Japanese yen, this is a probable case of breakage below 40 and a revisit here as well in the 2008 low near 71.50. That wraps it up for today. Make sure to check out FXTimes.com for more analysis updates and register for free educational live events. Thanks for watching and good trading.